Have you ever wondered how many dividend stocks you should own to build a reliable passive income stream without feeling overwhelmed? Maybe you've got a handful of stocks already but aren't sure if it's enough. Or maybe you've heard about diversification and feel like you need 50 stocks just to sleep at night. Well, by the end of this video, you'll know exactly how many dividend stocks you need in your portfolio to balance steady income, growth, and peace of mind. Stick around, because the number might surprise you, and I'll share a simple formula to help you figure it out. Now, let's get straight into it. First, let's tackle the big myth. More stocks don't always mean better diversification. Sure, you don't want all your money tied up in one or two stocks because if they tank, so does your portfolio. But owning too many stocks? That's like trying to juggle flaming swords. It's messy, stressful, and totally unnecessary. The sweet spot for most investors. It's somewhere between 10 to 20 carefully chosen dividend stocks. That's enough to diversify across sectors without drowning in paperwork or spending your weekends reading endless earnings reports. Why 10 to 20? Because diversification is about spreading your risk, not just owning a ton of random stocks. Let's break it down. If you have one stock in, say, tech, and something happens to the tech industry, like another dot-com bubble burst, you're in trouble. But if you own stocks across tech, healthcare, utilities, and consumer goods, you're protecting yourself from the ups and downs of any single sector. With 10 to 20 dividend stocks, you can cover all the major sectors and have a balanced portfolio. Now let's talk about keeping it manageable. Owning too many stocks can turn into a part-time job. Do you really want to track dividends, payout dates, and earnings reports for 50 stocks? Probably not. By focusing on 10 to 20, you can actually know your investments, what they do, how stable they are, and whether they're worth holding on to. Plus, when you keep it simple, rebalancing your portfolio becomes way easier. Nobody has time for a spreadsheet that looks like it was designed by NASA. So how do you pick the right number for you? Ask yourself 3 questions. How much time do you want to spend managing your portfolio? How much risk are you comfortable with? And how diversified do you want to be? If you're someone who wants to set it and forget it, go for 10 solid, high-quality dividend stocks. If you're more hands-on, aim for closer to 20. The key is to pick companies with a track record of stable, growing dividends, because at the end of the day, passive income is the goal. And here's a pro tip. Consider adding a dividend-focused ETF or two to your portfolio. Funds like SCHD or VYM can give you instant diversification without having to pick every stock yourself. They're like a cheat code for busy investors. Set it, forget it, and still collect those sweet, sweet dividends. If you're still with me, here's the big takeaway. 10 to 20 well-chosen dividend stocks are all you need for a balanced, stress-free portfolio. Anything more and you're adding complexity without much benefit. Anything less and you're taking on unnecessary risk. So, pick your number, stick to your strategy, and let those dividends do the heavy lifting. If this video helped clear up any confusion, let me know in the comments how many dividend stocks you're aiming for. And don't stop here. Subscribe so you never miss out on tips to grow your wealth smarter, not harder. See you in the next one.